Folks, I'm going to tell you 5 quick facts about black bull markets. Now, did you know, number 1, they're New Zealand FMA regulated? Number 2, did you know they have a copy trading service where you can either be a signal provider or copy signals? And number 3, did you know they've got over 26,000 tradable assets, including Forex, crypto, stocks, indices, and even more? And number 4, did you know they offer 500 to 1 leverage? And number 5, if you open up an account today and trade 1 lot a month, they're going to give you TradingView Pro for free. Check them out, Black Bull Markets.
Hello, hello, hello. Good morning, good evening, or good afternoon, depending on your time of day. My name is Gentsla, and welcome to the stream yet again. Welcome to the stream. If you're in the chat, please give me a thumbs up for audio if you can hear me. That would be great, because yesterday I had a little bit of a sound issue where it wasn't coming through my audio board. Sorry about that. And I'm just going to quickly whip on some music so that we don't get too bored. Let's put on this one. There we go. That's good. Hello, Sir AJ. Mohammed, thank you for the thumbs up. Appreciate it. Appreciate it. All right, so let's get into this. As usual, we are streaming our 100K Blue Guardian account. And yesterday we had trade, of course. All is well. Good. Great to hear it. Thank you for the thumbs up, everyone. You guys are amazing. All right, so we had our trade, 100K. We lost a little bit because of the what's it called, commission at the break even, and then we went up a little bit, and now we're on 0.22 of the, or 0.23 of the account, which is good because it is a slow process. It is what we want. We have our average winning trade, which obviously is a lot more than the average losing trade. Our average RR is 2.35. Our win rate so far is 66.67%. And yeah, we're up a little bit. And then time since trading, first trade, 23 hours ago. Last week, there was literally no trades available, so we weren't able to do anything, unfortunately. But such is life, and you take what the market gives you. Be there every day, be present, be on the charts, and take what you can from the market, and then dip. Yeah, we don't want to go in there and just risk your whole account. Now, going into our Guardian Protector, as you can see, because the trade was ended, it's reset. So I'm just going to change this to amount, and because we have a little bit more, we have 551 to balance it out. So that this risk over here, we have that $1 extra. This is great. We're going to keep on. It's going to carry on getting larger and larger and larger and larger. The 0.5% of the account. Okay. Now that that's done, let's close that out. Go to our dashboard quickly. See what we have here. We are still on the same thing. Our max permitted loss is 4,000. So there we go. Again, this challenge is infinite, meaning you can take as much time as you want. You don't need to be risking like crazy. You don't need the 0.5. You don't need a 1%. If you think about it in 1% terms, a daily drawdown of 4,000, you have 4 trades to lose to get there. 8,000, you have 8 trades at 1%. Now, if you have infinite time, why are you risking 1% if you can only take 8 trades? My strategy is 0.25% of the account, and therefore I am allowed to take around 30 to 32 trades before, and they all have to all be losses before I can lose my account. But we don't have to lose our account because we have our lovely Guardian Protector, which is always great. So I'm going to just remove the screen. and pull up our charts. And I actually have to open my broker to make sure that everything's in alignment. Yeah, okay, good. So while we're waiting for our time, which is in 14 minutes, okay, let's have a chat about yesterday and what I expected. If you were in the stream yesterday, oh, I love this person, tortoise waving, lots of thumbs up. Again, thank you so much. Really appreciate it. Thank you for confirming. You guys are wonderful. Keep it up. So we're gonna keep up with the thing that we did yesterday. Okay, so we set all of this, these points in liquidity. Okay, as you can see, they've all played out exactly as I said. From Asia, we went up, and I said that either at the end of Asia or London, we're going to go for this daily high, okay, because it's important to know that that's your HKG and your weekly gap. Now it went up from HKG, hit up here, and at around just after 3 o'clock, it then started going down, and it targeted again, funnily enough, that daily open. If you see there, the end dog targeted that, but didn't go do just that. It went to the Hong Kong gap for settlement. And then today we are resting within that Hong Kong gap from the previous day. And the daily open, it went straight up there. Perfect. Nice. So let's reset all of this for today. So again, very, very simple. We're out here, we pull up 259, which should be around there. Yes, 259 closing. Bang, it's on. Now you can see the way that price has reacted to it. It's phenomenal. You see all this area here, gets pulled away, comes back towards it. So AJ, my setups are very, very simple. I set up my end dog, I set up my HKG for the day, and then I look at a specific time. So I'm running through that right now. Now, my aim is to target the inefficiencies within price. So what we have right here is we have the lowest low after from 6:30 onwards. So here's 6:30, this candle right there. We have a low here. That's the lowest low from 6:30. So I mark that out in my chart, because these are your liquidity points. Okay, so we have 6:30, 7:30. I call that my 6:30, 7:30 sell side liquidity. And then I have my 6:30 to 7:30 buy side liquidity, which is just perfect at the top of that end dog right there. Okay, that is my 6:30 to 7:30 buy side liquidity. Okay, I have a whole bunch of things because I use multiple times throughout the day to trade. Now that we have taken this 6:30 to 7:30 sell side liquidity, what I am expecting is for price to push, price is to push away and to target the other side. All I'm doing is I'm targeting the opposing side of the liquidity because that's unfilled. So we go look on DXY right over here. And as you can see yesterday, opening gap came and it was seen to throughout the day beautifully, went into the weekly, came back in. Now we have today's opening gap. So again, we look at the time, 5:20 until 7:45, 5:20 closing until 7:45 opening. That is your daily open. Okay, now you can cross correlate, translate this onto all your charts. So every day you might have a different, normally it's at 6:04 to 7:45, but we have today 5:20 until 7:45. So we do the same thing. We go over here and we look at where is 5:20. It will be around this area over here because of all this nice flat candles. There we go. 5:20 is right there. And we look at 7:45. 40, 45, opening. Opening is up here. This is our daily. Now that fits in with yesterday's Hong Kong gap perfectly, okay? When price starts doing this, for me, I refer to it as nesting. You have liquidity nesting within other liquidity. All right. So let's just pull that daily open, open gap. Now, of course, my trade time is what we do is we wait for a, okay, we are waiting for a, here's the XY. We're waiting for, there's a gap that's been created. It is going to push away. I need a certain distance, a measurement of distance for it to then come back into the daily open. I use the dailies and also the Hong Kong gaps as my target for liquidity, whether it's in Asia, whether it's in London, whether it's in New York. It's the same thing every single day. Okay, and so obviously sometimes it's wrong, but it's about it's not about that. Okay, so you will you will take losses. So yesterday, for example, price went away from the opening gap and the Hong Kong gap, and then it had to have settlement. So it came towards the Hong Kong and the opening, then went away. In London, it was the same thing. London went away, came back to settlement, went away, came back to settlement, went up, came back to settlement. New York at 9 o'clock over here, went up to settlement, went away from settlement, and then came back to settlement for today. So it's a fairly simple process of just understanding where you have to set up your day correctly. Now I'm literally here setting up the charts with you every single morning. Well, it's my morning, but these prices set up the whole day, and price will go from one Hong Kong gap or open to the next Hong Kong gap and open. As you can see over here, I expected that this daily high would be taken. That this daily high would be taken just because it was a public holiday. And a public holiday, liquidity on both sides have to be taken because no trading was supposed to be conducted throughout that day. So we have here, price came up to just above the daily high, which funnily co-aligns with the previous Hong Kong gap and the one before that. Okay, into that very specific point of liquidity that I spoke about on Friday. Okay, and then from there, we've already rated the high over there. Okay, now price then starts making its way to the opposing side, which is your daily low. Now that happens in one day. It normally happens the day after a public holiday. Okay, now GU is the same thing. So let's just reset this, go back. As you can see, price over here has not gone to the daily high, but what it did do was that it went to that specific price yesterday. Okay, it rated it, went down, went back up to that very specific little point in price that I spoke about, and like to perfection, to the pip, and then turned on a dime, went down. New York comes in, and then it goes back up, and it goes up, and I'm expecting for this, I'm expecting high prices. AUD went from over here, that massive news dip yesterday, into the Hong Kong gap and the daily. Tap there, went up, came down, and then went up, and it's all perfection within price. So today, what we're doing is we're looking at this open over here. So if you can see, the times for the Hong Kong gap are right here on the right-hand side of the screen. So it's the 2:59 close and the 9:15 close, or the 9:16 open. Now this gap again is something that I've discovered in price. It's not something that anyone ever alluded to or taught. I was only able to do that through learning ICT's, what ICT does. He helped me discover myself. There is a void. What price is that? That is 9256 and 9275. So 9256, 9256 up here. And 9275 right there. There's a void in price right here. Okay, now these voids are big draws on liquidity. And that being there coincides with my view of what GBP should be doing, going up. And AUD, after taking all of this, it's funny. I want you to again, look at the price on the right-hand side. See how close we are to that round number, that beautiful round number. And we have the 800, which is a beautiful number. And then we have 8200, which is up here, which needs to be seen to. Then we have, after that, again, you look at the 258 and then the round number. So we're within this opening gap right now. Like, I mean, you can see that this was set yesterday. This price, the Hong Kong gap, was set yesterday. And look how these points in price, they are so precise every single time. I'm not even joking. It's exact. So we have 2 minutes until we expect to see something happen. Now this looks like it's going to actually go. There's like lots of liquidity resting on the buy side. But what we have over here is we have a lot of liquidity setting up for it to go down. It's like over there, we have liquidity setting up, and then it erades downwards. $5.20 open to 7.45. You're within the opening gap right now as well on GU. Go look at AU. Looks like it's above the opening gap. $20 is over here. 35. Open is right there. Above opening gap. And we are new. You see this? Wonder why price targets at that point specifically? Because that, between those two prices, is previous day Hong Kong gap on Tuesday. Funny, last week. Isn't that funny? It's weird how accurate it is every single day. You just set up these price points on your charts and you can just either trade from them or trade towards them. It's literally how it rolls. Let's see what today is. AU. It's time now though. I'm a bit late. 59. Closing. Price pulling away to the up buy side. We're within the opening. We are in the opening, but we've already come down and filled it. But has DXY done the same thing? Is there enough space? No, there isn't, because we're within the opening gap. Now, in my opinion, okay, sell side has been taken. Now it needs to offer some kind of buy side for it to go above the 630 to 730. The same thing is reciprocated on all the other charts as well. 630 is over here. Is that 730? No. Buy side has been taken and sell side has been taken. 730 is there. See what it does? Price consolidates in this area, snaps the sell side, goes for the buy side. Sell side, buy side. We have 30s up here. Okay, so EU and AUD look like they are going to, they need to target buy side at some later stage. We're 730, yeah, 630, that was that right there. That has been taken already for the sell side. Okay, so buy side is available right now, so we're looking for longs. Euro, buy side is available, so we're looking for longs. What I want is price to go down so that I can take longs. I don't want to just enter, or like I said in yesterday's stream, you will have some people that are maniacal and they just enter and they don't have a stop, and then price will eventually go to their place, but that's not my trading style. Ooh. Nice void at 169 to 174. One 7.4 to 169. Now you don't see this void. Is it 175 or is it 174? No, it's 174. 4. Yeah, the void is right here. And that is replicated on AU as well, and GU. They all have voids. Let me go pull up my 5-tick chart. Within the time zone where I want price to go down and then to break, create a fair value gap and start going higher. So I've been missing all the do I trade NQS? When I'm on when I am on, yeah, that's a rate of buy side. Oof. My broker chart is not showing up. This stuff. It's literally frozen. Why is it frozen? What's going on? Again, how precise is that? Like, it's it doesn't get better. It really, really doesn't. Yeah, I was pulling up my 5-tick chart. There we go. Now our price is raging. Oh, it's catching up. Maybe it's my data. AUD has dropped lower while it's gone all of the shenanigans right here. Oh, you can see here, look. It's rated lower. It's exactly what I want. I want a lower low. I want it to go lower so that I can take it higher. I'm not one of those people that trade with the trend. I'm a reversal consolidation specialist. Yeah, and that void was replicated on the 5 tick beautifully with nice square liquidity. Up here at 206, 204 to 206, there is another void. A perfect price between, what's that price? 188 and 191. That's perfect price. There's a couple of liquidity points being set up for the day. It's rated. That void has been filled. That to me ready is a kind of change of structure, but I don't trust this change of structure. Why? Okay, if you're blindly trading just one chart, it's rough. Okay, you have other charts to correlate what you're doing. So AU is dropping. Okay, normally on normal days you have AU and GU and EU will trade very, very similar. Okay, if one is showing a lot of weakness, the others will have to follow. So this is going to go down. It's going to be a short. And then I'm waiting. Again, it's setting up liquidity here for it to snap down. And then was the news coming up? There's no news coming up. And then I'll be looking for buyers, and we're still within the time frame. So we've still got 10 minutes for it to make its maniacal move. Maniacal. Yes, so we're getting back to, do I trade NQ or ES? I do trade ES when I'm trading when I'm trading New York. But it's not often that I'll trade New York because I have a family and I live in Asia. New York starts for me at 12:30 in the morning, so it's kind of rough. I can't be trading from 12:30 to 4:30 a.m. I mean, I've got a family, I've got things to do. So here we are. That void in price, do you see how it's holding? It's really nice to see. Okay, now on to the next question. I noticed that you use TVC feed versus the Capitacom feed. They both had different gap. Why do you use that feed instead of? So I use the TVC feed because it's the one that I found that is not necessarily more accurate. I mean, you can use any feed you want, but the prices are respect those times, respect the gap more during those times. So again, all you're looking for is whatever kind of trading system method that you use. Like I said, it's a how do I put it? You're looking for your edge. Okay, and if you notice something happen over and over and over again from a certain price point at a certain time with wherever it is, then you utilize that, because the aim is to make money. It's not to be the best. It's not to be it's not to be right. The aim is to make money, period. Good afternoon. Thank you so much, Live Train Zone. Do I take all of the ICT courses? I have watched every single one of his videos. Again, I had a whole chat about previously about how I started, and how I started was actually watching his videos. He was like my introduction to trading back in 2020, the end of 2020. Just here, what are voids? Voids are where price has, so you can't see it on this chart over here. I'll just pull up the other one. Let me remove this. And then I'm going to add. So if you zoom into price right over here, okay, you can see that between this closing and that open of those two candles, there is no price whatsoever, zero price. Now these are big liquidity here. There's zero price. And what does price do? It comes down, 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 and then comes back up to fill that in perfectly. Over here's a lapping, what I call a lapping gap, where price closed and it opened below and then fills it in. That's a lapping gap, in my opinion. Here's another lapping gap. As you can see, price came in to that lapping gap, bang, set. Same thing goes for GU, which has not filled. There's a void between the closing of that price and the opening of that price. There is no price within there. So it's like a break. It's an inefficiency in the algorithm. It's broken. It needs to fill it in. You can see here, void comes down, fills it in. Let's go back and price a little bit more. There's a void over here. We go forward a little bit. You'll see that price comes back and sorry, it's connected to the auto scroll. But you can see over here, price, there's a void. What happens? Perfection on this side. So it comes up and takes that's where the market works from. It's how the market works. Believe it or not, funny, but if you start seeing these things on your charts, you'll be mind blown. Yeah, I agree. Changed my life. Changed the way I view the market, how you see how price reacts. Now, a lot of people don't like his version of trading, and they call it a cult and stuff like that. But what's funny is that most of the other traders today are actually utilizing some kind of system that incorporates his concepts without even realizing it. As I said, price over here, because of that rate over there, it's coming down, and I'm looking for more sell side for it to go to the buy side. Now we're still within that time zone, so now I want an indication that it wants to go up. Okay, and I'm busy checking my 5-tick chart. My 5-tick chart will tell me what I want to know. All right. Good day, late to the party. What did I miss? Tom, you've missed nothing yet. You're all good. What's my prediction on gold? I haven't actually looked at gold yet. Let me just give that a quick shimahul. Quick little look. It dropped the same as AUD. It just came in, filled in the previous day, perfectly, and then slammed down. So it's just, so gold and AU are very, very similar. Sometimes they can be correlated because Australian dollar is how do you put it? A big producer of gold. So their market is linked, like gold and coal as well. So their market, just like the Canadian dollar, is kind of linked to oil because they produce a lot of oil in their country. Yeah, nice. Void in AU. Yes, there is a void there, just around 9.8 and 9.4. The void on AU is 898 to 894. So you saw how the charts reflected. It was bouncing around on normally on TradingView, but the actual broker chart was kind of doing a little thing. And there's a reaction in price right now. We have a snap of equal highs. I don't see an imbalance behind there, so I'm not in. Thank you. Yeah, we're sitting here reading the tape, and if a trade presents, we take it. If not, then we continue. And it's a pleasure for replying. No stress. EU and GU going down, and DXY and AU going up. So right now, everything is going down. As you can see, it's all gone down. It was led by AU. All right. Just like I mentioned, when you have a strong reaction from one of the currencies, the two other currencies will possibly follow. Now, sometimes it was about a year ago. There was a break in correlation between like GU was just on a tear downwards, and it just tore down for days and days and days and days, weeks. Every single day was just like nut. But that's because they had a big came in to fill the void on the 5 tick on EU. Little void in there. But because this big movement going downwards, I haven't had a nice sharp move up for it to give me validation or enough displacement that it's going to seek the buy side. Again, we need measured moves. So let me just remove this. Okay. Now, what we're doing is you're measuring the distance from wherever you are in price to the opening gap. So now we have just over 5 pips, okay, on EU, which means that this is now a possible place that price could turn around. GBP, same thing. You measure the move out from where price is, and you go up here, that's 6 pips. All right, AU needs to fill this. It's going to go down. So because it needs to fill that, we're waiting literally until this gets filled. This whole wick over here, that is an imbalance in price. Wicks, okay, and this is another concept if you're thinking about gaps and all this kind of stuff. Like everyone thinks about FVG and voids and stuff. The wicks themselves are gaps, according to ICT. Okay, now what's interesting here you train tonight or average to savage? I'm waiting for within my time for a trade to set up. If it gives me the opportunity to enter. I don't just randomly trade. I have a very strict rule set. I have to have a market structure shift, whether it's on the 1 minute or on the 5 tick. It has to give me relevance, and it has to show me that it wants to move. I don't just trade for the sake of trading. Okay, so now we have SMT. SMT between, if AU breaks this high, there'll be a market structure shift, which it just was. So now that's been filled. Is there an imbalance in price? There's a fair value gap over here. I have to wait for this a little bit more. you'll see what I mean by on here, AUD has not come and broken, has not changed structure yet. Over here, there's blue candles. It's not changed structure just yet. There is an indication though that it wants to go up, and GU is replicating that. You can see it's broken structure. That fair value gap there was filled in beautifully, and now it's going up. EU though has not come and filled in. GU is seeking the void on the buy side for sure. Just over here. Remember, we're looking for buy side. Now EU has broken structure on the 5 tick. As you can see on the 1 minute as well, you can see that right there, that little candle, that is a breaker structure. That's a market structure shift. But now if it gives us an opportunity to enter or not, it just depends. Again, the opportunity might be there, you might be correct. But sometimes you just don't get the trade because it doesn't give you the opportunity to enter. So yes, SMT. Tom, what do you know about SMT? SMT is basically a divergence between the two currencies. So because they should be traveling in the same manner normally. Okay. What it means is that I'm just looking at this. I'm seeing what price is doing. And guess what? Sometimes price will move and you're not part of the move. It didn't give me the entry that I wanted, and that's okay. But it is life. It happens. If it reaches over here, that means that target's been met. And unfortunately, I wasn't part of it. But guess what? You take your entries on your rules. At the time, I didn't give me the entry. So what am I doing? I'm not trading. I'm just waiting. Because I have a time criteria. So SMT, while this is doing its thing. If you see what's happening here, we have this high to a low, okay, on the side. Then we have GU at the same time, look at the time, 908, the next, so it's 904, 908, we have two lows. Here we have 904, 908, so that is going higher, which shows that something is about to happen. There's a divergence in the currencies themselves. It's not divergence on RSI. It's not divergence on whatever else. It's literally you comparing the two currencies against each other and seeing how they want to respond. So because that went lower, and then that went higher, and AU also from 804. So that was not, so EU and EU and AU were the same, and GU was the only one that pushed up. Let's go look at this. Now within 915, 915 is set, the closing opening of 916. All right. That now is our Hong Kong gap right there. Now, because this has just been set up, price needs to go away from it. Okay, if it starts to chill with inside of this gap, it means that we're going to have a little bit of a consolidation Asia session. Now, do you see what's happening right here? Okay, we have AU has pushed lower, okay, while GU is respecting this fair value gap, okay, and EU again is respecting this fair value gap. That pressure over there, pressure, I'm just waiting to see which one is the best one to trade. Because we are within that Hong Kong gap. There's a fair value gap. Three, two. That. There's a void just down here. 9132, and then these lows, or this one candle here, this is a low, but they're equal lows on the 5 tick. So there's no buy for me yet. And what that's showing me is that I possibly have to wait a little bit longer. We might get a trade kicking in just before 9:30 or at 9:30, depending on news. Let's go check the news. Is there any Asian news today? Isn't this as oddly familiar as what yesterday was? So we had daily open above the Hong Kong yesterday. Daily open, Hong Kong. Price had to go away from it to then switch around to come back in. And if I was wrong and it continues to go up, again, that's the trade missed for the day, and that's okay. The life does go on. Oh, nice. The only news today is the US dollar FOMC member speaking at 1:45, which is in 2 hours and 25 minutes. We have an FOMC member speaking. All right, this is actually going up because AU snapped this and it's going up. GU has resisted from that fair value gap. It was perfect. And here, this is perfect. Fortunately, I was actually waiting because that slight little void in price at 32 right there, I was waiting for that. Okay, we still might have a little pullback into this area here, but I don't think it's as likely. Because GU over here, you see this is setting up again, snap liquidity points here. High, it goes lower, high, 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 high. It all looks like one line. It breaks that and then it makes this move. Howdy, Alex. Come on, snap. See this? These lows over here, there's a void in price right there as well. I'm waiting for that to snap. Come on. Don't need to have news up. Let's pull up my 5 tick. Nice. This is actually very nice. What's that? Price. 9153. 9147. Right up here. 9153. 9147. Are you filled yet? No. Head for the equal lows. That little void. Nice, it's happening. Let me change this music. It's time. I see price going here. Gap, gap, gap. Liquidity. Imbalance. Let's go. Oh yeah, sorry, you need to watch everything else reflecting. So this is going to go here. The ultimate goal is to go here. So when are we buying? So I'm looking at buys on all the crosses with the US. Five exams in 4 days. Yo, that's rough. That is rough. You need to be studying. How long have I been trading ICT? I've been trading it for a while. Viral? It's good to know we're out here. Good to know we're all out here in Asia. Average is a lot. Anyone can draw FPGs and arrows, but few can execute. Are you sure about that? Yeah, anyone can do analysis. Literally anyone can do analysis. But do they ever show you this? Bum bum bum. Oh wait. I don't think so. But hey, I'm just drawing arrows. Enjoy the arrows. Yeah. Oh. So you haven't been here. My whole plan is to go slow. I have an infinite amount of time. I don't need to waste. I don't need to be risking 1% or even 0.5% because we've got lots of time. As much time as you want. Which means take the setups when you see them. Yeah, gold now is not moving whatsoever. We see here we have liquidity, liquidity, liquidity. Equal highs above here. But my expectation is that it goes down. And everything else, of course, in correlation goes up. So GU goes up, AU goes up, EU goes up.
Try to play, but you're never gonna beat me. Look the other way, what I'm doing ain't easy. Bloody and stained from the people who
No,
deceive me.
it's 100k account.
Through the chains, go free me. Looking for change, looking for pain. Pulling a mob, pushing a train. I'll never stop, stick to a lane. Pick up the pieces and go rearrange. I'll be the best above all the rest, put me to the test. Expect nothing less, you check as I'm chess, what's happening next, yeah.
Exactly. I want people to try fade my trades. That would be funny. They'd blow their accounts. They won.
So he's been looking for somebody who could save him, instead of searching inside for what they gave him. A strong will, strong mind causes mayhem. We could change the world, change times.
Yeah, that's been seen to now. Been seen to now. We're still looking at bar side. GU needs to go up because that liquidity up there from the public holiday was not taken. But maybe they're waiting on GU for the Bank of England news that's coming out. My target is this 630 to 730 buy side liquidity with this perfectly square formation right here being another point of interest. We have equal highs over here. Up here, what we've got is this beautiful, beautiful square. Whenever I see squares like this in price, for me, that just shows me that it's a target of some kind. And if I'm wrong now, I know that in London, it'll come back to this area. If it doesn't come in there in London, we'll have the switch around at 6:30 when the London people go on their lunchtime. So yesterday on Twitter, I made a little cheeky comment about people in Hong Kong have to have lunch too. So while this is all happening, let's go look at that. What time would lunch be for people in Hong Kong? Same time as everywhere else. You have 12, so that's midnight, New York time. Okay, midnight, which you see over here, until 1. Both sides of that need to have balance. So after 1 o'clock, takes the sell side and goes straight for the buy side. Of course, pulling in people to go to, just like today, to go to the 630, 730 buy side liquidity. He looks ready. I'm already in the trade. I'm just waiting. I'm waiting for it to get to my, because I have a 4R set. So now I just wait for it to go to my 2R, because I take partials. Okay, I have a 4R as my average trade. At 2R, I take 50% off, so that I at least have 1% in the bag. If price then comes around and stops me out at break even, then that's okay. I've made 1%. And if it doesn't and goes to my complete target, then guess what? I've made 3%. Or not percent, R. Hey, you gone up beautifully. Maybe I should have traded that pair, but hey.
I feel like I'm losing my mind. Is everybody in the world blind? Please, Lord, give me a sign, a sign. I feel like I'm losing my mind. Is everybody in the world blind? Please, Lord, give me a sign, a sign.
Yes, sir.
Everybody on the fake shit. I look around and feel like everybody is the fakest. I make this every day and I'm impatient, hoping one day I blow up from the basement. Statement, the top is so vacant. I don't hear shit that I think is amazing. Waiting for my day when I'm playing sold out shows for 1,000 faces. Hey, give me that crown, get in my way and to be put down. It ain't your place, all this my town. If I want that shit, then I'll get it right now. I'm losing it, the noose it fits. I'm losing shit, a stupid myth. You choose to live or choose to dip. You choose to fight or lose your grip and lose a gift. I feel like I'm losing my mind. Is everybody in the world blind? Please, Lord, give me a sign, a sign.
So my entry was here. My stops were here. Let's come up. At this point, I actually now didn't hit the 2R, but I manually closed 50% of it off.
There's no mercy in this world, just hunger.
and then I pulled the stops up to break even, and now I'm just letting the rest ride. And whatever happens, happens, which is life, and we wait. I'm chilled. I can close my. How do I do it? I can only have with the streaming software that we have. I can only have the one like thing open at the same time. I can't have like two pages. So let me go to present. I'll show you the window. As I said, as price came up here, okay, that was my entry. As prices come up, what I've done is above these highs, there's equal highs there, I've pulled 50% off, and now I'm waiting for the rest. If it stops me out, that's fine, not a problem. I'm at break even, doesn't matter. Oh no, it's not his software. It's I can set up a thing on OBS where I can switch screens, but what it does is it uses more of my computer resources. It gives it a little bit of like latency. Because what I'm looking at here is that price is likely to come down. And if it goes below my entry price, I don't want to be in the trade anyway. But what the chart loves to do is it loves to like pull you. It loves to pull you into thinking that it's going to go down. You're like, oh, I have to get out. No, just leave it there. It's at break even. So like, why do I need to do anything? I don't. I've already taken partials. Money's been made. Just continue. But yeah, we got our chair. We can go into the rest of the charts on how I actually view the chart. And if you see over here, AU is targeting that void. GU has already targeted that void. That came and has not completely filled it in yet. Still got a little bit of price to fill in there on the buy side. So price will need to go up, but it's left another void down here on this squareness. Again, we have nice squareness over here. Whenever I see squares, I love it. Shows me a lot. Again, trading, you're not in a rush. It's a slow process. The aim is to make money. No matter how you make money, but you make money. It's not about, you just stick to your rules and do what you have to do. It's not about like risking mad amounts because you're trying to keep up with the Instagram, Twitter people who just, they post their trades and stuff and you're just like, okay, but are you sure that's real? If this closes where I want it to close, I'll get another 300 for today. If not, that's okay. It's life, it's trading. even if you have a 100K account, why would you risk? Like that's the thing with the prop firms, is that they've developed models that entice people into risking more than they can actually sustain. Okay, like people risk so much more. All right, it's actually ridiculous. Like no one, if they were trading their own capital, no one would trade like these people trade on prop firms. No one. And that's how you need to view the markets, is you need to see it in terms of you need to see it in terms of if it was your own capital, how would you manage it? This is how I would manage it personally, because I want to preserve capital. I want to make sure that the account grows and doesn't disintegrate underneath my feet. This is interesting. Like I said, I love seeing squares. But here I can see that the squares are being formed in this area. People are buying and selling in this area. And here, it's going upwards. Here, coming down, and there's a perfect square within here, this whole price range. And that void right there, as you can see, the tiny little void in there, well, it's not tiny, it's quite big. That is a potential target later on. If price does come down, I'll be expecting later on in Asia or London for it to go back up to these highs. The risk that I have per trade is 0.25. So Joseph Hernandez, I like your concept, but the risk that we have right now, I base it not off the total max drawdown. I base it off of the how do I put it? I base it off of the daily drawdown. So I have $4,000 of daily drawdown. Now I want to make sure that I can take enough trades for that 4,000 to be able to make money. Okay, so as you see, we got stopped out there. And guess what? It means nothing. And that's okay, because that's why, again, I have my model of I take profits off, and then if it continues, it continues. And that's just how it is.
Instead of searching inside for what they gave him, a strong will, strong mind causes mayhem. We could change the world, change.
And if price decides that it wants to go up, that's okay. I'm not going to beat myself up. I'm not going to enter again. Right? I'm not going to enter again and try and revenge trade and then get stopped. No. I have the way that I trade, my plan, and you stick to it and you make money. End of story. If you decide you're going to go off and do different things, it's over. You can just lose money. Again, the aim is to make money. It doesn't matter how much money you're making, as long as you're making little bit by little bit. Again, it's an infinite account. It means that as long as you're trading, you can grow it in little increments and carry on going and going and going. You mean 0.025? No, 0.25. You'll see here, 0.25. Because what that does in Asia specifically is that it covers the cost of commission. So because the lot size has to be slightly higher, because it's a very small range, you have to trade more lots, or you have to put on more risk for it to have the same kind of profit factor, especially for a larger size account. What then happens is that you have quite a few lots, and because it's $6 a lot, that is what they're like $70 ish for that kind of lot size that I put on. Now taking profits off at 1-to-1 means that I basically cover the cost of commission and a little bit extra on top, and then after that is profits. So that's why the account started today on 220 something, and now we're on 243. So we've gained what, $20, which is fine. Because again, we're up, and every day we just carry on doing the same thing over and over and over and over. Terence, I'll show you right over here. So price broke this, had a market structure shift. There's a fair value gap that's right in here. I entered on the low of that fair value gap, and my stops were a little bit lower than here. Now it went up, 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 up. I took profits off, and now it comes down to fill in this void to go up. AU now is going to the buy side. It's seeking that point in price right there, and you'll see this will come up. It's exactly how the market works. They come back to force people out of trades so that they can continue the move. Now again, like I said, I'm not raging that price is going higher after coming and taking my break even, because I've made money. That's okay. It will continue to do its thing. There are times where it does not come and take your stop, and then you can take a full trade. You can see AU went down, everything followed. Now AU has consolidated and is going up, and everything is following in that consolidation. Yeah, Terence, no worries, no worries. Do I trade full time? No, I have my own business. I have my own business that I run. How do I know it's a fair value gap? Because the market is within my time zone, my whole trading idea. If you go back and watch the video, you'll see. Again, let me pull up that one. Present my analysis. That's what I expect. And because price has decided that it's not going to go straight there and come back and stop me off, that's okay. I made a little bit of money. I'm not raging. It's fine. It is life. It is trading. You take the wins, you take the losses, you take the break evens, and you just continue on going. Over time, over a period of time, you can compound and grow your account. That's all we're aiming for. We're not aiming for anything else. We just want to continue. People are in this big rush on Twitter and Instagram and stuff to be like, oh, who can make the most money, or who can do this the most and who can do that the most. Doesn't matter. All that matters is that we're all on our own journey. We're all on our own way of trading. Okay? And one style doesn't necessarily work for everyone. Again, I don't rage against people who use trend lines. I don't rage against people who use moving averages and stuff. If you find something that works for you, that you can be consistent in, and you have a way of analysis that you're able to look at the markets and be like, okay, this is what is going to happen, and it's predictable and it's consistent, and you do your own thing, then you can be successful. You just need to stick with it and have patience. The thing that most traders lack is having patience, of to literally just sit on the chart at the same time every single day, watch what price does, how it responds to certain things in price, certain times, certain fair value gaps. Okay. So Terence, you're asking, how do I know it's a fair value gap? If I go back in price, okay, and I take this whole leg from the top to the bottom, and I go look at the 15-minute chart, we have this leg over here. It's come down. Now we've broken at the top side. Okay, it's created this. It's come up. This whole leg here in price, that needs to have fair value. So what does it do? It creates another leg. This leg over here now needs to have fair value. Every leg has fair value. Every single leg. You can see this leg came down. Discount, fair value. If you take your fib from the high of that red candle to the low over here, okay, 50%, that's your fair value to go short. Very, very simple. You just look at 50% all the time. You can see the same thing replicated on almost every single leg. I'm not saying the whole thing going down. I'm talking about this leg over here. Okay, if I were to take my fib and go down here, 50% is there. You had fair value to go short. Of this leg, if you're looking for buys, you can wait for it to have a reversal, which is what I do. I'm a reversal specialist. I wait for the switch around to come back to then go up. So again, I'm looking from the high of that red candle to the low of this red candle here. Now, people will be offered fair value at 50%. My strategy goes, okay, well, you want 50% of the leg. I'm going to reverse to take the opportunity to get to that 50% or more. So then 50%, it offers fair value to the people who go short. I'm the one buying down here. Same thing on every leg. This leg over here goes up. You have 50%. And this candle, blue candle to that blue candle, 50%. That's offering fair value to go up. It does that. This leg over here coming down, same thing. Down from the red candle to the red candle, 50% of that continues going down. This one, exactly the same thing. 50%, it offers fair value. It then goes down and down and down and down from 50%, eventually going higher. 50% of that leg. That leg there. What's 50%? Right there. Then it goes up, it goes up, it goes up. So this leg over here has not been offered fair value on the buy side. So it means that I'm looking for prices to come up. Just like over here, the leg has come up, it's gone down, and this has not offered fair value on the sell side. So eventually today, what you'll see is that price will be pulled down to this fair value gap over here. Okay, fair value gap, meaning it's a gap of fair value within the range. You see the high, the low of this leg to the high of that leg, 50%. Within that range of fair value, they will offer some kind of something, probably around the daily low of the public holiday, to then come up and seek buy side. Why do I am seeking buy side? Because GU has not got its public holiday daily high yet. That's a target for GU. AU has also not seen that. So GU and AU are relatively close in correlation to each other. That's why when I see one like AU targeting going downwards, I'm like, okay, now it's everything else is going to follow. It's not hard. So here, so in this case, you're expecting a bull channel hoping for breakouts or retest the high at some point. That thing that catches me is knowing how to identify the low. So how you identify the low is your time. Your times are defined by hourly candles, 4-hour candles, daily candles. Within that, you have trading times. Okay, I look at the 1 minute chart because I don't need to look at the 1 hour because I can see the 1 hour represented within the 1 minute. I know that that's a 60-minute period of time. What has happened in that 60-minute period of time? Let me just go back to here, the 1 minute. Okay, we have this 60-minute period of time. What's happened? The legs come down, it's come up to 50%, given fair value on the buy side. Okay. If you look at this chart over here and you check the candle time exactly, 9 o'clock on the dot, the open over here, sorry, over here, 9 o'clock on the open. Okay, that's your opening price. You then have 10 o'clock, which is here. Okay, 10 o'clock closing over there. That's your closing price. So what does that show me? That shows me a 1 hour candle. That there is a 1 hour candle. See, price came down, it went up, created a wick, came down, closed, and now has gone underneath. So that is, on the 1 hour, you'll see it identified. If I just remove this and make this a complete red-ish thing over here like this, and I add this one over here, and I make that 4 pixels, and I make it a line, I put it to the downside. You'll see that that is your 1 hour candle. That there is your 1 hour candle. Right? So let's go look at the 1 hour. Look at the candle right next to it there. So let me just move this. You can see the open, the close, that's what the candle looks like. And you can repeat that for every single hourly candle. Now every single candle, apart from the exception, okay, has wicks. Has these wicks. Okay, so price has to go up and it comes down, there's a body, and then it has wicks. There's some rare exceptions where there'll be no wicks or very small wicks, but those wicks are formed within a certain period of time. Okay, normally the period of time that the wicks are formed in are between a whatever hour and then minute 50 to the next hour, minute 10. Okay, so like right now, what we're seeing, so let's go in the 1 minute. Between, so it closes at 10 over here. So far, we created downwards movement between 950, it goes up, it comes down, takes the lows, and then sets up a wick. Now, that closing price there on every single hour is important, because that will be your base price for whatever buy side wick will be created or whatever sell side wick will be created. So that's why at this time over here, you identify that this has been a wick that's been created. So from here, the hour closes at 9 o'clock. It goes down, seeking the liquidity on this side. And then as soon as it makes a market structure shift, you have that fair value gap between the candles. That is now from 9 o'clock. The next candle, okay, the next candle has come up, it's come down. That then creates the sell side wick. So what we do is we try and capture as soon as it goes up in price, we try to capture a point of fair value within that on the 1 minute leg to then take the rest of the candle up to the target. But as I said, when I first started the stream, if it decides that it's going to hover in this area, I'm expecting an Asian kind of consolidation, which is kind of expected, especially after we had a move up, came down, and it's just been grinding up all this way. It's just going to consolidate until London. There are days in Asia where you literally catch the move and it goes hundreds of pips. But they're very, very rare. It happens like once a month. Okay, so that's going to be it for me for today. Thank you so much for joining in. Taking a trade, it's been a bit of consolidation, which is okay. It happens. Again, there's only three things that happen in the market. It either consolidates, expands from a consolidation, or reverses. There's only three things it can do. End of story. Doesn't do anything else. Expansion, consolidation. Expansion, reversal, consolidation. As in reversal into a consolidation. You can see this the whole time, plotted throughout all your charts. It's all the same thing. All right. We have expansion, consolidation, expansion, consolidation. This is all one big consolidation leg. Then we have expansion, consolidation, expansion, expansion, reversal here at the top to come seek the sell side liquidity to then expand. So it reverses again to then go into consolidation, to an expansion, consolidate, an expansion, consolidation, expansion, expansion, reversal. So that expansion from the reversal expansion goes down, consolidates, expansion, reversal, consolidation, expansion. Literally, that's it. You just need to identify and be on the charts and read price. Literally, I spent 6 months watching the 1 minute like this. And I'll literally watch it go up and come down and go up and come down. And all these little things. I'll be looking at the time at the bottom here. I'll be looking at the time and I'll be looking at all what it responds to. What times does it respond to? How does it respond to the opening gap in price? How does it respond to this Hong Kong gap in price? How does it respond to the previous day's Hong Kong gap? So again, here, draw that out. How does it respond to that? With perfection. Opening gap sets up, it's perfection, perfection. Every single one of these candles on the 1 minute, you can see that it is doing, like, look at that. Respect, respect, respect. Previous days Hong Kong, respect, 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 respect. I love it. It makes me excited. I love price. And it takes, you have to be really, like, single-minded in a way. You have to be really focused on what's happening, because it's not just watching price blindly. In the beginning, I initially was doing that. I was watching it blindly, not understanding what I was seeing. But over time, I was able to connect all the different dots, and then you're able to consolidate it and then start understanding what the candles are doing. All right. Dench, yes, I did. We did have a trade. It was on. I took a bit of a... It went up. I took a little bit of profit, and then the rest came and stopped me out for break even. So that's okay. We made a little bit today. That's fine. We'll come back in tomorrow. Terence, not E. ES is actually quite clean. So if I go here, just change it to if you're in America, of course, you're trading ES, but here in Asia, it's very difficult because, again, New York time, when they open, it's very, very hard. So, and also we cannot trade the ES instrument that you trade. We have to trade the US 500. So it doesn't matter which one we go to. Let's just go to this one. As you can see, price over here is I call it dirty. It moves in a very tight range. After 4 o'clock, it just goes into this really, really tight range because this is now a price that is not on the open market. Okay, so we have from 9:30 over here, 9:30. This is when the market opens for traders, and it closes at 4 o'clock. So we go to 4 o'clock, 4 o'clock. Okay. Now that's your window of opportunity to trade if you're trading ES. What you do is you go to the previous day, okay, 4 o'clock, wherever the previous day 4 o'clock is. Have a look. No. 4 closed at 4 over here. Okay, it doesn't give me a 4 o'clock because it was a public holiday, but anyways. So if you take this line over here, wherever price is, where it closed over there, all of this price within here does not matter. The only price that matters is the close and the open. So this was a close, and then your open is down here. So this is your open. Okay. All of this other price is nonsense because it wasn't done within the American session where it's clean. So what we're doing there is that in price, that is a gap. Okay, that is a gap. As it opens in price down here, what you're expecting price to fill in this gap, and that happens every single day. After the gap is filled in, it then makes the move that it needs to make. So according to my strategy, at 9:50 to 10:10, so this is 9:50 over here, until 10:10, okay, this is how I trade, is I wait for a market structure shift, which happens right over here, and it's within my time window. Okay, market structure shift, I'm then looking at the fair value gaps within that. There's a big fair value gap within here, and it of course goes to this void in price. You then take a trade in that. So if you took a trade from here and you put your stops there, that's fine. If you put it over here, that's fine as well. If you put it very high, that's fine. And then price goes to wherever you want it to, not wherever you want it to, but I would have put it over here. 1, 2, 3, and then put that in. Now, of course, because this is a gap, price seeks that same, just like how we trade. So, Robert, on US 500, we don't have the RTH, ETH. Okay? On the other instruments, you do. Okay? The futures instruments. And the same thing is replicated the day before. It's very, very simple. If you're looking, you can look at the daily opens and all of that kind of stuff. Fine, you do what you have to do. But all you're doing is you're drawing a 9:30. Okay, there's 9:30. That is the open over here. That's the open right there. Let's draw that out in price. Open. Okay, we have the 4 o'clock close, which is here. Okay, let's just pull that out in time. Closes down here. Okay, now the distance between these two is a complete gap. And what does price do? Price goes and fills in the gap and then starts making its move. Isn't that funny? You go the day before. All right, so we look at 9:30, which is over here. The open price of 9:30. Drag it back, and we look at the closing price of 4 o'clock. Should be over here somewhere. 4 o'clock, closing price, right there. So what do we have? As market opens, there is a gap. That gap gets filled. Okay. Now, of course, what you can do, if you want to, is you can drag that price out in time. And where did it respond from? Funny. So why would that be your target in the future? Oh, wait. Yeah, so trading US is actually really easy compared to the other time zones. See, if I kept my stop where it was, price would have continued. Like I said, I challenge anyone to fade my trades. You're gonna lose. And that's okay. My time's done. This is what I expect. You can see the same thing on GU. That void came in, got filled. Beautiful. AU, we're expecting buy side, which just got filled beautifully. So the way I see the markets is literally through where liquidity is when markets open and when markets close. That's how it is. Okay. You guys have a lovely, lovely day, and I'll see you tomorrow. Keep fresh, keep excited. If you enjoyed this video, hit a like, and definitely keep on tuning in, and we'll just keep on going. It's going to be a long journey. We'll probably be here for about a month, 2 months, until it's done. So have a lovely, lovely day. I'm at the only Gentsla. I'll put into the chat.
Check as I'm chess, what's happening next? He got the venom, a tangible weapon, no coming in second. This life is a lesson. He got a new engine from pain, it's a blessing. New focus, no guessing, just bought an obsession.
So who would have thought that at a certain time, price would go up? Not me, because I backtested and researched it and made sure that my plan revolves around it. Okay. You have a wonderful day. Take care of yourselves, and I'll see you tomorrow.